Hello, this is George, and I'm creating this quick video today to introduce my next installment into my Easing into Easy Language series. I thought I'd leave the series off as a trilogy, 3 books, but now I've added another book, the Day Trade Edition, and now it's a trilogy, 4 books. And you're probably asking, why would you dedicate a whole book to a subject such as day trading, where a lot of people cannot participate? Because day trading occurs during the day, and like they say, you can automate, but you should not automate without attendance, meaning you should be in front of your screen or have some manner to confirm a trade is going to take place. Now, a lot of people, if they're trading from home or working from home, they can day trade. And also, you can hire a system assist broker to help you day trade. And also, if you have a way to confirm via email or whatever your orders during the day, then you can day trade as well. So, yes, the audience is much smaller. The trading audience is much smaller for day trading than it is for overall trading. But the topics are intriguing, and that the topics of day trading and the algorithms that are utilized are intriguing, and the code for the management of the trades during the day when a trade is on is also quite interesting and educational. And that's the whole purpose of the Easing into Easy Language series, is to educate you on how to program in Easy Language for all kinds of conditions, such as long-term trend following, short-term swing trading, or even day trading. So this book is over 200 pages in length, and it's dedicated to day trading. And I'm going to show you 2 quick systems or algorithms that I introduce in this book, and you might find them kind of interesting. And like I said, anytime you can add a little bit of more knowledge to your programming skills or your craft, I call it a craft. You have to work at it every day to become a good Easy Language programmer. Any type of programmer, you have to work on your craft almost daily. So there's some topics introduced that you probably haven't seen before. And this book is basically, I guess, is a child of my high-res edition, because I talk a lot about intraday data in the high-res edition. But this book will build on that and expand to day trading. I think I had a chapter or 2 in the original high-res edition, but this book is solely dedicated to getting in and out on the same day. So let's look at a couple of charts real quick. Okay, this is a example of a trading day. You open here, you open near the prior day's close, and this is the NQ.D, the NASDAQ. And this book is designed for futures and stocks. In each workspace, I try to include a stock such as Apple, trading 500 or 100 shares or whatever. But this is a good example of a trading day where the market opens near its close at the I think it was the 4:15 close. We open at 9:30, the 9:35. You can see it. You have kind of a stagnant day, not much going on, and then all of a sudden you have a little bit of a build up, and you buy on a breakout. Now this is a volatility based breakout, meaning that I take the true range of the X days and I say, okay, if certain criteria are met, buy a certain amount off the open, a certain amount of the volatility, and I do that. And the indicators, of course, that you see here are included in the book as well. So you buy this breakout, and it kind of meanders, and all of a sudden, a news event, something happens, and it takes off like a rocket. Down here, you're thinking, oh, this is a fake out breakout, and you were starting to worry about getting stopped out. But then all of a sudden, the market, it says, okay, something's happened, let's take off. So you take a profit. And like many times in the trading day, the market will revert back to the mean, and the mean would be near the open. So we take a profit, which is a nice profit, and then we clear out the prior day's high, which is this line here. This is the prior day's high. Let's see if I can pull that in to this chart. Right there it is. Okay, that's the prior day's high. And a clear out trade is basically you exceed the prior day's high by a certain amount. Well, you really blew through the prior day's high. And if it goes a certain amount above the prior day's high, and that's what this line is, then you say, okay, if the market starts to come back to revert, I'm going to sell short at yesterday's high. So what happens is you take your profit, the market starts reverting back to its mean, and all of a sudden you clear out and you go below yesterday's high. In this situation, the strategy sells yesterday's high. And then you had all this momentum carried through. The bears really jumped on the bandwagon once we started getting through yesterday's high. And a lot of time the day traders look at those points as important points. The pivot point, the high, the low, the close of the prior day. Those are kind of important points for the day trader to be have in mind. They're easy to look up and see. So we sell short there, and then we take a profit. Now, it doesn't always happen that way. A lot of times you'll have the fake out breakout, and thank gosh we took the profit down here. Had we not taken the profit, we'd have given it all back. And so you have a lot of breakouts, and you have a lot of mean reversion. Right back here, it reverts again to the mean, and it starts working its way back up. And let me show you a couple times where it didn't work. Worked there. That's just on a pure breakout, no reversion. Okay, here's an example of, and in addition, this is another, I have another component of this strategy. If you get stopped out within a certain number of bars, after a certain number of bars, within a window, you can reverse. And so I bought here on the breakout, and then the market sold off, immediately. I didn't, I never went back up there. It sold off. Never went back up there in the interim. Sold off, sold short, where I should have been stopped out, which I had been stopped out, but I reversed, and then I get stopped out again. The original breakout was right. It would have made a little bit of money. You could have taken a profit somewhere around here late in the day. So this system doesn't always work, but it's the language, the easy language that's involved with it is kind of interesting. And none of the strategies that I show are more than, maybe at most 90, 100 lines of code. So the code is efficient. I've been able to create this code through years and years of experience. So it will definitely save you a lot on the learning curve by looking at my code and seeing how I do things. And there's a lot of limitations to EasyLanguage, but you can overcome those limitations by using the other tools that EasyLanguage provides you. So here's some more trades, some winners, some losers. Nice breakout trade there for a profit target. But as you can tell, here's another breakout, liquidate to short. This time the market we liquidated and reversed at our liquidation point, and we made a nice profit. So that's one of the strategies that I reveal. And here's another one. This is a fun one. This is I call it Pyromania. And let's see what it looks like here. My computer's a little sluggish. Bear with me for a moment till we get over to this. There we go. Now, this is a fun to program, but also if you have a simulation account, it's kind of fun to watch it during the day to see what it does, how it works. But I call this Pyromania because what I'm doing is I'm adding on positions through these levels, and this was somewhat similar to a strategy that came across my desk when I was director of research at Futures Truth. And basically, you overlay the trading day based on, I think I did this with some volatility, and all these different levels are equidistant. And based on the movement of the market through these levels, you pyramid. You can either pyramid based on a limit order, which I show. I think this is a limit order, or you can enter on stop orders. I'm sorry. These are stop orders. I'm sorry. because we're going up. I also show you how to, no, that's not Pyromania. That's another strategy I talk about. That's the mean reversion. Oh, no, Camarilla. That's the Camarilla levels. Where the Camarilla levels is where we're using mean reversion. This is you entering on stop orders. I'm sorry about that. But it's kind of intriguing. The market moves up to your first level, buy, and it moves up to your second level, buy, and then you dump. Okay? You only lose out on the last trade. So it's buy, 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 dump. And you only lose out on that last trade. Here, the market took off. You bought at level 1. You bought at level 2. I dump back at level 1. So I'm always buying as the market moves up through the levels. But when it moves back to the subsequent level below where you last bought, you dump it. Okay, so the market comes all the way back down. And then all of a sudden, you can sell as well, but it never went down to the sell points. It bought on this breakout again. That's level 2 breakout. And lo and behold, look what happened the rest of the day. Okay, so that's a good trade. And I'm going to show you some situations where it's not so good. But the programming of this thing is pretty intense. I mean, it's very educational. Here's a situation coming up. Let's see if we can get this going a little quicker. I got a lot of data on the screen. There we go. Let's see if we can span this out. And this is where the market interacts through the different levels all day long, and it can become very frustrating as congestion. That's what kills day traders is congestion. But this strategy, here's that basically the open. The market sold down to the sell level 1. Went back up, you got out, you bought at level 1 on the buy side, you got stopped out. Finally, the market starts making some good moves, and you sold short on S2, or not S2, but level 2, sell level 2, and then you shorted again at sell level 3, and the market rallied back up, and you got stopped out. Now, that's a free trade because you got broke even on the last trade. It went down far enough to break this one even, and then you made money on this trade. The net was a loss for the trading day. But that's how Pyromania works. It like I said, it buy, dump, sell, dump. So you can modify the number of entry signals that you want to take during the trading day. Here's kind of an intriguing day with a lot of congestion, with a lot of volatility. End of the day, you bought level 1 buy, you shorted level 1 short, stopped out on both. You bought again. It looks like it was going to take off. You bought one more time, and it pulls back. So you lose on that last trade. You shorted down here, got stopped out. You said, let's try it one more time. You got break-even trade. You can enter long 3 times, and you can sell short 3 times. Now, that's a lot of congestion. A lot of volatility and a lot of congestion. And, of course, you can expand the distances. I'll allow you to do that with the strategy, and I'll show you how to do that. And here's one last trade. This one actually turned out pretty good. Let's see. Let me pull it over just a tad. This is ideally what you want to happen. Well, yeah, ideally you want this thing to just take off like to the moon through the levels. Oh, this is a good trade here. Good market action. You bought, buy, dump. Okay. You take profit on the first buy. You take profit on the second buy. The third buy is a break even, free trade. Market decides to roll over late in the day. You sell short at the sell short 1 level, sold short at S2 level, you even sold short at S3 level. Market moved down enough to pull the stop to break even. So that's kind of what you kind of want this type of action if you can get it. The best case scenario is the market, you take a profit before the market rolls over, and it keeps going down, and you just keep on selling short your in number of shorts, and you take a profit. So those are 2 strategies that I show, the Pyromania, and then I show you the breakout and clear out mechanism. Those are 2 distinct algorithms I show in the book, and I show you how to program them. There's thousands of lines of code that you get. Each strategy has a different version of itself. You can buy on a breakout. You can buy on a limit. All those are different strategies of the same genre. So you get all that code. Let's take a look at this real quick. Here's the contents of the book. Chapter 1, I talk about the open range breakout and other sundries. Chapter 2, I improve the open range breakout with some pattern recognition, meaning I'm looking at Toby Crable's NR4 range compression before day trading. And then I look at a time-based breakout. Say you want to buy the 30-minute high or 30-minute low. That was a very popular trading system at the time. At a time, I was at a conference, and the keynote speaker introduced that strategy and showed how well it did. And it does do well over time, over certain times, but it does really bad at certain times as well. The lunch break is a fun system as well. That's when the popularity of entering after the floor traders and the locals took their lunch. You could trade in the direction of the trend prior to their lunch. A lot of times guys would go eat and they'd come back and they'd say, okay, well, the market was up before we went to lunch. Let's just keep on pushing it on up. Or they might say, hey, let's counter trade this thing. We got a lot of weak-handed longs. Let's go ahead and let's move this market down. So this lunch break algorithm I introduced shows you how to take advantage of both sides. I extend the breakout technology to scaling in and scaling out. That's where you put two on, take a profit on one, let the other one ride. I can scale out in pyramid, multiple positions. Here's the Pyromania. Introduction to zone trading with the Camarilla. And I show other day trading templates. This book is compliant. I give you Workspaces for 10 and 9.5 TradeStation. I also show you how to set up your workspaces in multi-charts, because a lot of times, people buy multi-charts and it's very difficult it's impossible to open up a TradeStation workspace, but it's impossible. It's hard to, have to rebuild from the text the workspaces that the author's, describing. So what I did this time is I show you how to build in multi-charts. If you have multi-charts, each chart and the indicators and their inputs and the strategies and their inputs for each chapter. So that should help you get up to speed if you're using multi-charts for your day trading purposes. Okay, that's it. I just wanted to show you that. The Kindle version is available right now at Amazon. The paperback should be available in a day or two. So I just wanted to let you know that there is yet another book in the Easing into Easy Language series. Thank you.